Okay, so what we're practicing today here is completing our worksheet by extending our balances to either the balance sheet column or the income statement column. So the first thing I'm going to look at is that imaginary line that I draw right on income summary. And anything above the income summary line is either an asset, a liability, or an owner's equity. So one of our accounting equation accounts. And those are going to be extended onto the balance sheet. Anything below the income summary imaginary line is either a revenue account, which in this case is just sales, or an expense account. And those will go into our income statement columns. So it's really simple. It's just finding your number and dragging it across the line until it goes into the proper column. So the first one we have is cash. And if I take that number all the way across, it's a debit. So it's going to go into, again, the balance sheet debit account. And I'm just copying the same number over. So 9,800. Okay, I can also take petty cash and do the same thing. It's a debit, so I'm going to place it into my debit account balance. And then I go down to accounts receivable, debit, also going to go into my debit, 2795. On the next one, I have supplies, and when I bring my number over, I'm running into this $131 credit adjustment. So at this point, what I'm going to do is I'm going to take my original $456, I'm going to subtract my adjustment of 131, and I'm going to put this remaining $325 in the column with the bigger number. So the debit was bigger, so I'm going to put this amount into my debit column, 325. Okay, I have the same thing with prepaid insurance. I started with 750. I have an adjustment of 250, so I'm going to subtract, and I'm going to put the $500 remaining into the column with the bigger number. Again, the debit account, so I'm going to put 500 there. When I take accounts payable, that is originally in the credit column, so I need to bring it all the way over to the credit column. And the same thing goes for capital, originally in the credit, so I'm going to put it in the credit column. And then drawing is my last account above income summary, or my last asset, liability, owner's equity, and that is a debit, so I'm going to put it into the debit account. Now what I can do is I'm going to total up my balance sheet debits and my balance sheet credits. So I'm going to take 9,800 plus 150 plus 2,795 plus 325 plus 500 plus 340. And this column, I'm getting 16,970. Then I'm going to take my credit column, 555 plus 14,885. And I'm going to get 15,440. Now they don't match, and that is okay because we still have to figure out whether or not I have a net income or net loss. And when I add in the net income or net loss, that's when my debit and credit columns should match. I'm going to take my accounts now below the income summary line, so my revenue or my sales account and my expense accounts, and I'm going to extend them to the income statement column. Sales is always, always, always a credit. So if I look at it, it's in the credit column. I'm going to drag it all the way to the credit column. I didn't run into anything, so I can just put it in there. I have advertising expense. It's a debit, so I'm going to drop it in the debit. My insurance expense, even though it's adjustment, it is in the debit column, so make sure it just gets to the debit. Miscellaneous was a debit, so I'm copying it over. Okay, I have a debit for supplies expense, so it needs to go into the debit account. And I have a debit for utilities, again, needs to go into the debit account. Now I'm going to total. This is my only number in credit, so I can just bring that down. Now I'm going to need to add up 931 plus 250 plus 378 plus 131 plus 1100, and I get 2790. Again, my debits do not equal my credits right now because I still need to figure out, do I have a net income or a net loss? And then I do my final debits and credits. In this case, we need to remember that a net income occurs when the revenue, which is our sales account, is greater than our expenses. A net loss would occur in inverse situation where the expenses would be greater than our revenue, aka our sales account. If I look at this is the total of my sales account, 4,320. And that is a bigger number than the total of my expenses, 2,790. So I have a net income. I've made more, I've sold more than what I owe in expenses. So over here, I'm going to write net income. And I need to figure out how much more of a net income I have. So I'm going to take my revenue, I'm going to take 4,320, and I'm going to subtract all my expenses. So minus 2,790. So my revenue net income is $1,530. That is increasing when I make a net income. So I'm going to drop that increased amount into my debit column under income statement. So 1,530. Now that I have a debit, I need a matching credit. And so instead of putting my matching credit into the income statement, I'm going to put whatever the opposite that I need into my balance sheet column. So my matching credit is going to go into the balance sheet's credit column, 1,530. If I had a net loss, I would have an income statement credit and a balance sheet debit. Okay? Now, all I'm focused on are my totals plus either my net income or net loss, and that's when my accounts should have my debits equal my credits. So I'm going to take the total expenses, 2,790, plus my net income amount, 1,530, and I'm going to get 4,320. The total of my sales plus my net income or net loss, which in this case is just the same thing, 4,320, and I get my debits equal my credits, so that's good. I don't have anything to add right now to this balance sheet column, so that I can just carry it down. And I do need to take my total of my credit, so 15,440 plus 1,530, and I get 16,970. And I see my debits equal my debits equal my credits. So if I check my answer, I should be all set.